going on, everyone? Welcome to Decred in Depth. Today's show, we're going to try something different. I'm going to call this the Decred Roundup. And I got two very good friends of mine, which you all should know very well if you're associated with the project. My friend Checkmate and Permabull Niño. How you gentlemen doing?
It's always good to be back on Decred in Depth.
Yeah, likewise. Thanks for having us.
Of course, anytime. So with this show, we're going to go over some current events and pretty much just go around the Decred ecosystem and let you know what's going on, some papers, some proposals, and just different ideas we'd like to share with you guys. So to start it off, let's go over some current events. Recently, Bitcoin Gold was attacked with a 51% attack. Bitcoin Cash has recently announced that they have a funding round to support their developers. And Zcash is having major governance issues and recently forked and have reinstated their founder's reward. Checkmate, what are your thoughts on what's happening around the CC space at the moment?
Yeah, there's a lot of really interesting stories here, and they're kind of highlighting, I think, at its core, the challenges of blockchain mechanics. And we're getting to the point now where these networks are reaching a scale and an age. If you look at Bitcoin, it's getting into its last 3 million coins to mine. Same with Bitcoin Cash. And they're getting to the point where making these complex decisions, Zcash is a little bit younger, but making these decisions like Bitcoin Cash of trying to implement a funding developer reward, which is supposed to be 12.5%, that's basically siphoned off by miners. It'll be interesting to see whether this actually gets the go-ahead, but it certainly highlights that funding is a challenge for these projects, and eventually people need to get paid in order to keep these things growing and developing. And Bitcoin's somewhat unique in that it was able to bootstrap itself that way. But it's very late in the game for these projects to kind of come to this realization. But it does kind of give credence to the model that Decred built, where it thought about the idea of funding, and it thought about the idea of having some mechanism to actually not only make the changes and do the protocol level changes as required, but having a mechanism to do it in a really civil and positive manner. So it's kind of a controlled system. And, Zcash has had quite a lot of, there's been a lot of discussion around its whole governance process. How does it deal with funding longer term? There's negotiations between the various parties. There's the Zcash Foundation trying to support the community and be their voice. There's an electric coin company who's obviously the core developers and research arm behind it. And even debates around trademarks and things like that really muddies the waters and makes it quite a challenging space. So, we see these projects, the smaller they are and the younger they are, that often the easier they can deal with these problems. But the more mature they get, the larger in size they get, and the more stakeholders and people are involved in it, it really does start to get quite complex, and it highlights some of Decred's really positive decisions.
Yeah, I completely agree. And it's also one of those things that people, it's like an insurance policy, right? You don't appreciate the fact that you pay monthly premiums on your insurance policy until something goes wrong, right? And now what we're starting to see within the cryptocurrency space is that you see security attacks, you see funding issues, you see governance issues. And a lot of people, whenever you bring up Decred in this time of peace, basically, right? People are like, oh, I don't like, it's cool, but like, do we really need that? We have Bitcoin, we have all these other options and stuff like that. And when you start to see these things go wrong, you really start to appreciate having, that quote unquote an insurance policy, which, in Decred's case means just it actually showed up prepared and from day one was working towards this stuff because, the community saw that these were going to be issues moving forward. So, when you look at the Bitcoin Cash situation, adding funding this late in the game is just like, they're 18 million coins deep. That is super late to be like, start worrying about these type of issues. I mean, I guess technically Bitcoin Cash has only really existed since August 2017. But, when you start making these changes really late in the game, it erodes like confidence and assurances that people think that they can place into these monies, right? Because part of the whole selling point of cryptocurrencies is, they're algorithmic, they're mathematical, they're free from human intervention. And when you start just like tweaking with things that are kind of like part of the basic fabric of the social contract that people buy into when they get into these projects, you start to like almost deviate from what the original path is. And you're like, is this what I even invested in? Do I want to keep holding this? And, when you start just tearing away at the fibers, eventually the whole thing starts to unravel, right? And Decred is just very well constructed from the get go. So you can place a lot of confidence in that. It's similar with countries and stuff. When a lot of people like to live in countries that have very stable, supportive governments. People want to build businesses in places that are safe. So when you look at projects like Bitcoin, Bitcoin's kind of stayed the path. It's done it in such a unique way that no other coin is basically able to copy. But Decred was like, we're going to take this another direction, and we're going to still reach a very quality outcome in just a in a differentiated way. So over time, I think we'll start to see more and more of these coins having more governance issues, more funding issues. And the beautiful part about Decred is that it's just storming forward. In the bear market, the amount of stuff that's been put together, which I think we're going to talk about later in the pod, is amazing, right? So it should be interesting to see how all these things play out. But it's I don't know. It's late in the game for a lot of these coins to start making these changes. If you want my 2 cents on it.
It's a signal of foresight, right? And the design thought about these things a long, long time ago, and it did it in a really elegant manner.
I agree 100%. We know how difficult the Decred chain is to attack. How some of these chains continue to get attacked and stay around, it kind of blows my mind. With Ethereum Classic and now Bitcoin Gold. Check, you recently wrote a paper on security. Would you like to cover that?
Yeah, so I mean, it's topical because when we see these 51% attacks, and it's kind of, for Bitcoin Gold, it's a subject of being a very small proof of work chain. It's also, I believe, it's GPU mined, so hash power is able to be rented off things like NiceHash, and rentable hash power is actually a real drain on security, on the actual strength of a security system. Because you effectively know that the party who's attacking it can just rent the hardware. They don't have to go through the process and the logistics. And the logistics is actually really important, of acquiring the hardware, setting it up, getting the energy contracts, all that kind of thing to actually undertake the attack. So what Decred's security system, and why it's really unique, is by layering over the proof of stake hybrid system. It is a two-factor, and as we know, just trying to log into anything, if your password's your proof of work, then having some other system that you also need to attack, it's the exact same as a multi-sig. Having a 2 of 2 multi-sig is way more secure. Even if you left one of the keys out in the wild, it's way more secure than having just a single key, because it does provide that second layer of security that at least there has to be. You can't just get in there with the single key. So in the paper that I released a little while back on Decred security, what I kind of set out to do, it was spawned on by this concept of unforgeable costliness, and trying to quantify what is the amount of work that you would need to put in to forge DCR, or in other words, to create a alternate Decred. Call it a Decred cache, call it a double spend chain, however you want to call it. What is the actual expenditure that you need to go through in order to create that second chain? And what's really interesting about Decred's design is it has this fascinating security curve where there's a trade-off. If you have a large portion of the DCR tickets, you obviously have to put forward a fairly substantial sum of money to acquire that, and there's a logistical challenge to that as well. But it means that you don't need as much hash power to keep the chain moving as quickly. And the way that basically works is because you need 3 out of 5 tickets to approve a block. If you have lots of tickets, the likelihood that you're going to get 3 out of those 5 is fairly high. So you don't actually need that much hash power, or as much hash power, in order to keep up. Whereas the flip side is, if you have very, very few tickets, a very small portion of the ticket pool, you may get 1, you may get 0, you may get 2, but you're not going to get the 3 that you need to pass every block. And every block that doesn't get accepted by the proof of stake tickets essentially has to go back to step 1 and redo the actual proof of work. So that proof of work gets discarded, and then they have to remine it. So if you have very few tickets, you don't actually get the validation on a regular basis, and that means you have to be mining many, many times faster so that you can produce these fake blocks faster and faster and faster until your tickets finally vote on it. So it's kind of a trade-off between how many tickets you have versus the share of hash rate. And basically, at any point below, it's even 25% of the ticket pool, it's almost exponential. In fact, it is exponential in terms of the amount of honest hash power that you need. And if you had 50% of all the tickets, you would still need to do a traditional 51% attack where you basically match or are a little bit faster than the honest miners. And anything below half the ticket pool, which at this point in time is over 25% of DCR supply, anything less than that, and you basically need orders of magnitude more hash power. So it is a very, very strong system in that regard. So what the paper tried to do was really summarize, if we look at these, what happens if an attacker's got 5%, 10%, 15, 30% of the tickets. And within the paper, I basically assumed that whatever this party was has those tickets at no cost. So it could be a centralized exchange. It could be the pre-mine. It could be some of the largest ticket, if the voting service providers became hostile. So it was basically discounting any cost of actually acquiring those tickets, looking at any kind of centralized bodies that would have them, and then trying to map out, okay, let's say we have 3 of these VSPs collude and they end up with 30% of the tickets, or if all of the exchanges collude. And even under those very, very strong and conservative assumptions, 30% of tickets is kind of a all-in attack where you've got the exchanges and a couple of the vote service providers all coordinating in order to achieve this goal. So the logistical challenge remains very high to get there. And even under that circumstance, Decred, when you compare it on a cost to attack perspective, it sits very, very closely up there with Bitcoin and Ethereum. So Bitcoin remains the number one security in terms of cost to attack. Ethereum is about an order of magnitude below that, and Decred competes specifically with Ethereum at that level of number 2, number 3 at 30% tickets mined, which I believe is probably a fairly good gauge for a extremely hostile and coordinated attack. And when you kind of think about it in that context, it's actually quite remarkable that a coin that's, I think 750 times smaller at the time of writing compared to Bitcoin, I think it's about 100 times smaller than Ethereum, is competing on in the exact same heavyweight ring on a immutability and cost to actually wind back the chain. So that was kind of the crux of the paper. But it was a really interesting study to see just how exponential the security curve is at almost all rational ticket ownership levels.
Yeah, and what honestly, Checkmate, what I loved about the paper so much is that you took such a dynamic approach, right? Like you compared multiple different avenues with if A happens, then B needs to happen in terms of how secure the chain ends up being over time. Because a lot of these, if you look around, there's like that website I think that lists like what the 51% attack cost is for a bunch of different POW coins. And you even look at Masari, look at all these other websites, a lot of people have trouble quantifying what the actual attack cost is for Decred, right? So the fact that you provided so many different ways to look at this data and also explain that because of the two-factor authentication system for Decred's security scheme is that it's just so dynamic and it's a moving target. So it was really cool to just see like the range of security that Decred can provide stakeholders within the network over time, right? Because, at the end of the day, it's a digital scarcity revolution, right? And if you can't enforce that scarcity, why are we here, right? So, and also another thing that came to mind is that, I've actually heard people argue that a 51% attack cost isn't that big of a deal. It's just one attack, we can move on from there. It's not the end of the world. But what it does is it erodes confidence in the system that you've bought into, right? Like if I find out that somebody else is just able to easily 51% attack a coin that I'm holding, I to me it feels like I'm getting cheated, right? That person got double the amount of money when they double spent those coins, right? So to an extent, people think it's just like a one-off instance that doesn't really matter, but in reality, it is fundamental to why we're here and the underlying fundamental value of these respective coins that all of us decide to hold. And with the case in your paper, you just proved that Decred is just an absolute beast and, the ultimate wolf in sheep's clothing, as someone much smarter than me once said. So the piece overall was just amazing, though.
And I think to kind of just bring back to what you were saying about, the confidence, that really is what it's about. And for those who would maybe not be overly familiar, when it comes to a 51% attack or a double spend attack, it's actually the person who is receiving those coins who has to bear the brunt of that. And most of the attacks we've seen here have been related to exchanges. So somebody will, establish the point where they can do a 51% attack, in Bitcoin Gold's case, for example, they send a certain amount of those coins to the exchange. They wait during that time, they start mining an alternative chain in secret. What happens is that the exchange then says, okay, you need X amount of blocks, say 10 confirmations before it's deposited. That happens. They swap it out for some other coin. They withdraw it, and then they release their longer proof of work chain, which essentially overwrites that transaction. So that deposit is now no longer there. And if a coin goes through this, or a protocol goes through this too many times, you end up as a merchant, or as somebody who's receiving that payment. You don't particularly want to receive that payment because you may have to wait for a very, very long time. And this is where the concept of finality comes in. And I got a lot of questions about what finality means. It's basically the point when there's been enough money spent, there's been enough cost accumulated that if you were to go and unwind that transaction, it just is no longer worth it. If you send $1 million transaction, it's going to cost you $2 million to undo it. Well, then you can probably consider it finalized. So that's what the concept of finality was trying to capture, is how long until it's just not worth rolling back. The incentives are no longer there. And that's really where Decred excels, is on that trust level, and making sure that things are genuinely finalized.
Yeah, and we, at the beginning, in the early days of the cryptocurrency space, you used to see coins flaunting the fact that they had lower block times, right? And in reality, block time doesn't really matter if you don't have the security to back it up. So, with all these 51% attacks, you look around in the cryptocurrency space and you look at the exchanges. They all started to get sketched out. I mean, Coinbase even released a blog post that said these are the new updated confirmation times for these different cryptocurrencies, right? So, you already see that these exchanges start to get sketched out by this type of activity, and especially during a bear market, right? Because, when the coin prices start going down, that brings down hash rate, and it provides a much larger incentive to attack, because when prices are going parabolic, people aren't really trying to cheat the system. At that point, they're kind of just like, what, I need to, flip some coins or whatever for profit. But, when things start going awry, the incentive, starts to get substantially higher to attack these coins. And I've also said this before, that, it's kind of like a survival of the fittest. If you see two different coins and one is substantially pound for pound weaker, you're probably going to go for the weaker one to double spend on. So, if these exchanges aren't on top of their game, they're going to get burned on this. So, circling back to the point that we discussed earlier, is that entrepreneurs are going to have trouble building around some of these protocols if they can't ensure that if they get substantial skin in the game, they're not going to get burned holding the coins, right? So, it all is a huge deal, and people overlook security just because like I said before, if a double spend happens, the show still goes on, right? The chain can continue, but the way entrepreneurs and holders within the space perceive the project substantially changes, which is a big deal.
Yeah, I definitely agree. So, Niño, I know that you're working on a new paper. Hats off! I heard it's your shortest. It's based on the the DCR ticket funding rate. You want to cover that a bit?
Long story short, Decred tickets are really interesting, and over time, because I've spent so much time looking at tickets, it's a question that's I've been constantly asking myself, and other people have actually asked me too, just because they know that I spend so much time looking at the ticket data. And the question is, are tickets a gauge for sentiment? So this whole piece is built around the fact that ticket prices moving upwards and downwards, and their corresponding rate of return with those tickets is an ultimate gauge for user sentiment within the network. And sentiment, as you guys know, if you are, if you pay enough attention to the trading space, you guys, I'm assuming you both are aware with the BitMEX funding rates, which basically shows how the rates increase and decrease based on how badly people want to get long or short. And when the rates get super high for the long side, that means longs have to pay shorts, and then vice versa. And that is just like overall, when you look at the price charts, whenever the funding rates have gotten super high, there has been like large price corrections. So I thought that I thought that there was a way with the Decred tickets, and the way that the ticket pool tries to tether the size to 40,960 tickets. And I took a similar approach in Outlook from the way the BitMEX funding rates work. And within this piece, I just explore a bunch of different ways that you can look at the ticket data and determine whether or not tickets are overbought or oversold. And what you get to see over time is that at the extremes in the Decred ticket funding funding rate, quote unquote, that you see major price reversals, right? The high, like for example, in a big run up, if you see a high unwillingness to hold tickets when the prices just shot up like crazy, you generally see big corrections after that. And for example, or when you see the price going downwards really strongly, and then you see followed by a large spike in demand to hold tickets, it should probably tell you that hodlers are stepping in and ready to put in the bottom. So, and then anytime you get like small little fluctuations in the demand for tickets, it generally does it means it's very low conviction hodling, buying or selling of tickets during that period of time, which means users should be on their guard that it doesn't necessarily mean a reversal is anytime soon, and that the conviction from either side is not very strong. So you should just probably stay on guard. But overall, I found the piece. I think people will find the piece to be interesting, and I think it's just like the work that Checkmate, myself, and a lot of the other researchers within the Decred project do. We're kind of just like building blocks. You know, a lot of the work that we all do is built and served to kind of build off of each other's work. You know, none of us do work that is like standalone. We all get influence and inspiration from each other. So, you know, for me, this piece is kind of like the first step, hopefully in the right direction for all of us taking tickets and looking at them from a token, which gives us an indication of user sentiment over short time periods. And yeah, I'm putting the finishing pieces on that, and hopefully it should be out within the week.
Interesting. Checkmate, we know that you have a node proposal that's live right now, and I would say that's it seems like it's an amalgamation of both of your works, the DCR data side at least, which has a lot of your work and Niño's work as far as indicators are concerned. You kind of want to go over that?
Yeah, sure. So basically, the current proposal is it's two parts. The first part is trying to kind of bring up to speed. We've had a lot of people who've asked whether we can get some of these charts that myself and Niño and others have created over time, if we can get them in some kind of public forum and format that people can kind of dissect. And I think the charts at DCR data have a very high quality, and I think that the community really appreciates having those. So the first part of it will basically be to bring up to speed with all of the charts that we've established to date. Basically writing a Git issue and building a sample chart. So it'll take me some time to just kind of distill. I tend to try and get as much information into my charts as I can for that. So if all you saw was the chart out of my papers, you would still come away with the bulk of the message. So I try to annotate it and get enough information in there that it's kind of a self-contained unit. And what I'll try and do is distill them down so you can see that in DCR data and on the Block Explorer, the charts are very clean. They tell a very simple story, and there's no interpretation. So that's really what I want to get to. I really like the way that Willy Woo has done his website, where it's got a bit of a blurb just describing what the metric is, and then a link to the relevant paper for more information. But at least giving some context to these things. So part one is basically, Niño and I will kind of work in the background and develop a base chart that shows what it should look like, and then spec out what the actual calculations are. And the other side motivation for me is to really learn how to actually dissect and understand DCR data. So that's kind of a side project I'll be working on, which will then feed into part two, which is dissecting all of this on-chain data. Most of it that I've taken is part from DCR data, and then part from the Coinmetrics suite. And from Coinmetrics, it tends to be fairly it's kind of a global aggregate. It's transaction counts, aggregate values, things like that. And DCR data has a lot more granular information. So you can go down to the level of, is that transaction a privacy mix? Is it a is it a ticket? Is it a vote? All these kind of things. So what I really want to do is get in there and start looking at some of the more granular data, because I'm positive that we'll be able to understand a whole lot more about the psychology. And in my paper that I'm just wrapping up now, as part, it's the final part of my first proposal. It's basically exploring the psychology of the four main stakeholders of the Decred network, and that is the holders, stakeholders in proof of stake, the miners in proof of work, and people who are building and working off the treasury, and trying to understand a little bit more. It's kind of a summation of the Decred project through its 4-year history, and specifically looking at the psychology of each of those four different parties, And going deeper into DCR data and understanding more about it at a granular level, I'm positive will give us a whole lot more insights into, what is the overall mood of the network, how has it changed, and looking at even just aggregate values, the privacy mixing has a very, very, very distinct increase on chain. It's beneficial for miners because it's increasing fee levels. The activity level is increased because there's people who want to mix, and it also, from a technical perspective, uses more addresses and more transactions. So the network is actually more alive, and this is a really valuable piece of information because it shows us that there's a real demand for that privacy mixing, and it's going to be really interesting to kind of watch that as it expands. And Lightning Network as well, those transactions will have their own signatures, and just being able to understand how the network is being used, where the demand factors are, and it kind of gives us an aggregate view on the health of Decred and its stakeholders. So that's really what part two is going to be looking at, as well as a little bit of armchair philosophy that I kind of want to delve into, having looked at it from a psychological perspective. I really do want to start exploring some of these slightly more conceptual. So take a sidestep from the data a little bit, and try and test my hand at a bit of trying to understand the concepts and the fundamentals of the chain, rather than necessarily than going down the hardcore data path. So it'll be a bit of both. And I think one thing I am going to try and do, so my previous papers have been quite lengthy, and that's more so because it's kind of in my process of distilling the Decred chain, and it's a complex beast. But now that I've kind of established a groundwork that I can then refer back to as a anchoring point, these will be more kind of concise to a specific point. It'll be exploring privacy, or it'll be exploring Lightning Network, or one particular element of the design. So that'll kind of be it'll be more frequent papers, but on a more specific targeted topic.
So I guess I just want to I want to speak a little bit to Checkmate's proposal. I think the expansion of what you're trying to do in phase 2 of your research is just it's the next logical step. In that the number one thing that we're trying to do here, especially with the especially with your part with the wanting to add charts to DCR data, is that the Treasury is here for us to build out public infrastructure related to Decred, right? And I think adding these charts and giving people the blurb below explaining exactly like what it is, and giving Decred that war chest, that suite of on-chain indicators, puts Decred in a league of its own, because a lot of people, look at on-chain related indicators to Bitcoin, but there's like no other coin really has like a built out robust suite of this type of stuff. So the value that the project is going to take away from that, it almost can't even be valued, right? So I'm super excited for for you to move forward with that, and I think it'll be an amazing next step in your in your research phases.
Yep. So I might just add one thing to that. Just worth highlighting. So the core part of this proposal, the work that I'll be doing and Niño will be doing, it'll basically be the specking out. So just to be clear, what we will do is we'll work with the DCR data devs to understand exactly what the issues will be, and what the actual calculations will be from DCR data plus the sample chart, and then we'll be working with the DCR data guys to then get that actually implemented into the system. So it'll kind of be a bit of a staged process, but at least at the end of this phase, we'll have a bit of an understanding about what the technical requirements are, what the spec is to actually get them up there, and it should be a good resource for the community to consult. And I think it's worth pointing out that as Niño said, there's not many chains out there that have the infrastructure for this, but at the same time, there's also not a lot of chains that have enough actual on-chain activity that really justifies having any on. There needs to be the liveliness on chain to develop these on-chain metrics in the first place. And Decred's one of the few chains that really does have quite a very distinct heartbeat going on. And the tickets really are the centerpiece of that. And that's really where a lot of Niño's work is picking up picking up that heartbeat and looking at how the stakeholders are actually interacting within the system. So yeah, I'm really excited to see it get built out.
Understood. DCR had a extremely strong 2019. I want to ask both of you, what are you guys looking forward to in 2020? based on all the success and developments we had in 2019?
Yeah. So, what I'm excited for in 2020, the thing I'm most excited for is the decks, and the reason why I'm really excited about the decks is that I started looking through the decks documentation on GitHub recently, and there was like a little blurb in there that said, if you can start building basically a reputation based system with a combination of Politeia and the DCR decks. And I started thinking a little bit more. It's like, what exactly do cryptocurrencies do at a high level? And what they do is they kind of disintermediate uh, the role of government in a big way, right? It is, it's not. That's why it's a naturally libertarian leaning movement, because it kind of cuts out the middleman, i.e., the government, on a lot of different stuff. At least from public infrastructure at the digital realm level. So what really caught my attention is that like with cryptocurrency, governments provide money, public infrastructure, and identity. And when I saw the little blurb about the DCR decks in combination with Politeia, is if you tie your identities between the two, that you could start building a reputation based identity system. And to me, I was like, oh, this is like incredibly interesting, and that's something that could lead to further build out. When you start getting more applications and whatnot built on top of Decred the network. So for me, the DCR Dex, and also just from just the basic level, what the actual DCR Dex does is that it provides an on and off ramp between Bitcoin and Decred that is permissionless, right? So at that level, Decred, exchanges are just middlemen at the end of the day. So anytime you can cut somebody out from telling you what you can and can't do, it is a huge net positive. And I think for Decred as a community, I think it'll be a huge step forward for the entire ecosystem and the project at large. So that's what I'm most excited about.
Yeah, I'd agree with that. I'm really excited to see the decks get built out because the thing's going to be bomb proof, and it's really there to be the decks of last resort. And kind of building on that, what I'm really excited about Decred for 2020 and beyond is, to borrow a phrase from our Ethereum friends, composability. And what we're starting to see is that once you factor in the Lightning Network, once you factor in the demand for privacy mixing, you've got things like ticket splitting that come into LN, and then you've got things like the DEX. You start seeing that there's actually a lot of interoperable and highly desirable features that, quite frankly, Decred is the only chain that actually has these features. And once you glue them together as a package, it's a really, really strong contender. And not only that, because of the DEX, you're going to have the ability for Bitcoin and other infrastructure to actually take advantage of these systems. So it's kind of that composability element, and I'm actually quite bullish on Lightning Network. I think there's going to be a lot of really interesting development. I think there's going to be more and more people moving into Lightning Network to build. And again, this is one of those things that Decred's design, it didn't do what Bitcoin Cash or Litecoin did, where it was basically a copy paste. What Decred did is it offered a completely different system. It's been able to bootstrap itself with the treasury. It's been able to build these extremely unique features. And because it does have all these unique features and also benefits Bitcoin, there's the ability for developers to actually start moving between these chains. And what I'm really excited to see is some more collaboration in the space, and particularly developers working on Lightning Network wanting to take advantage of features like the mixer, wanting to take advantage of things like the DEX, and to start actually building these things into a bit more of a wider ecosystem that extends even beyond Decred. And I think that's something that I'm really excited about is hopefully starting to break down some of these barriers that exist external, and some of the cult followings that go on in the space. I think that a lot of those walls are going to start getting broken down when people realize that there's more benefit to actually interacting with Decred and utilizing the infrastructure that has always been and will always be that open source nature. I'm really excited to see how that kind of element and how Decred starts to implant itself. And once you factor in things like reputation systems, there's going to be DAOs popping up left, right, and center, and they're all going to want a piece of Politeia. All of these systems are built for the future, and Decred's always had this, 10-year ahead look ahead, which is, again, remarkable for a 4-year-old project. And I'm really excited to see some of that foresight really land on everybody's desk, and people start going, wow, that really was well planned and well executed. So I think that's really what I'm looking forward to is that side of things.
Yeah, I mean those are all amazing points. Another thing that comes to mind for me when you start explaining it like that is that the approach is very, from a Peter TLS perspective, like very 0 to 1. That Decred kind of dominated. It's like a couple like small niches that were actually extremely important, and dominating those niches just will aid in massive expansion, right? What Decred has dominated in is its security, right? Hybrid proof of work, proof of stake with the dynamic ticket / proof of stake process, which, normally with a lot of proof of stake coins, you just see, static proof of stake, which basically coins like take like the price to the cost to stake doesn't really change and whatnot. So that's incredibly unique. And then it also, made sure that all the bases were covered and incredibly easy to use when it comes to governance, and building those two together in conjunction with the treasury and then the mind share and the enthusiasm that the community has for the project. You can just see with the way you just laid everything out, Checkmate, you can just already see where the direction is going, and you can see that this thing is going to expand in a big way. And it's only, in my opinion, it is just a matter of time. So yeah, your spiel right there got me really excited.
Yeah, and when you think about the expansion of all of that, at the end of the day, the beating heart of this whole thing is the treasury. And, once you start looking at all of this, and once the value really does start to accrue, the value it becomes a perpetuating cycle, because, for our network recently, I put out that chart that showed the amount of, if you price every Decred treasury transaction at the date when it went out, which is, obviously not quite exact because it's based on, weekly moving averages and things, monthly averages. But on the day when the actual transaction gets processed, you just price it there. Decred to date, to bring itself from Genesis to now, has spent just under $7 million, which is in the space of technology, that is a extremely small sum compared to the actual value to output of the project. And even within the treasury at the moment, what is it now, about 18 million, 20 million or so, you're still talking about having 3 Decreds left inside the treasury, and that's at current prices. So once you do get that expansion, and once the feature set is fully built out, and the market starts to realize that there's a lot going on here, the ultimate value proposition at the end is, well, if we can build this with 7 million, what on earth can we build with 10 times that, or however far this thing goes? So it gives you that idea of how big Decred can actually be and what kind of impact it can have long term. And I keep coming back to the thing that Amar wrote in his, I think it was his first paper or his second paper, where he said if Bitcoin had implemented the 10% treasury, how much would that be worth today? And it's a fairly hefty amount of money, and it's totally self-sovereign. So, I think this is kind of that's the end goal, and I think it's, the feature set's there.
We should be doing this once a month for everybody tuned in. Do you guys have any closing thoughts, and where can people find you?
For me, I'm really excited to see what 2020 brings. I think Decred's really well positioned for the narratives. I think privacy is going to be a big narrative. I think funding is going to be a big narrative. I think governance is going to be a big narrative. People don't like to talk about governance because it's hard to kind of wrap your head around. But the reality is that all of these projects are dealing with it. They're all dealing with it in their own ways. And I'm continually amazed by how well Decred handles it. It's got the tools built out, it's got the people built out, and it's got it all comes down to the social contract at the end of the day. And to be honest, I think it got it really right. So I'm really excited, and I agree. We should be doing this on a regular basis.
I basically copy everything Checkmate said. I don't think I could have said it any better. And just keep stacking Decred if you're a Decred stacker out there. And if you're looking for me, I'm Permabull Niño on Twitter.
You'll find me at Checkmate. Thanks, guys.
Peace.